Good Monday morning. My name is Mike Haltman. I'm the CEO of Hallmark Abstract Service. We provide title insurance for residential and commercial real estate transactions in New York. And over the weekend, President Trump, he floated a trial balloon. He talked about 50-year mortgages, which is an idea that's been floated before, but it is a way to lower the monthly interest expense, the monthly mortgage payment, but it comes with some pros and it comes with some cons. So, what are some of the pros? From a personal finance perspective, it will lower the cost for families, it will give them a little more predictability, and it can help with their budget. They'll have the lower rate, and it would be a good thing for many homeowners. For first-time home buyers, it will give them a threshold and a lower payment to the point where instead of leasing an apartment, now they can look into the idea of buying an apartment or a home. Financial predictability for 50 years, people will know exactly what their mortgage payment is going to be. And because of that, another point is there's less pressure to refinance. They will know what their costs are, and if interest rates drop precipitously, they can look to refinance, and maybe because of their financial situation at the time, refinance into a 15 or a 30-year mortgage. And it could also, from players in the real estate market, title companies, real estate agents, real estate attorneys, a 50-year mortgage could ignite more demand and help with a sluggish market. So those are good things. But what are the bad things? So the interest expense. In a mortgage, typically the first years, you're paying much more interest than you are paying off principal. A 50-year mortgage is going to extend that a great deal. So home buyers, homeowners could face almost double the interest expense that they would with a conventional loan. The equity in the house, another con is that the equity is going to be slower to accumulate. And in the event that housing prices drop, because they don't have any real equity in the home yet, they could actually go underwater. Another con is for lenders and investors, the banks, the people who make the mortgages. They're going to face much more interest rate risk, and as a result, hedges need to be developed that they can use to offset some of that risk. Increased demand, while that sounds great, increased demand with particularly now limited supply could greatly increase home prices. And that's something that we really don't need at this point in the market. And finally, retirement. For many people, their home represents a good piece of their retirement savings. If you have a 50-year mortgage, you're not building that equity. Even if home prices increase, you owe the bank a great deal of money, so you are not growing equity in the house as quickly. So what's the bottom line? 50-year mortgages, if they were to occur, are a good idea. And I think, to my point of view, what needs to be remembered is that you can always refinance a loan. If your financial situation improves to the point that you can now lower your 50-year mortgage into a 30 or a 15, typically there are no prepayment penalties, and you can do that. So I think the refinance piece is important to remember because, yes, there are cons to the mortgage, but refinancing is always a great way to mitigate any of the cons. So if you have any questions, my contact information will be in the description below. If it's kind of questions about real estate, home buying, mortgages, title insurance, anything that has to do with the real estate market, please reach out. In the meantime, have a great day.